Get ready, because the market is absolutely exploding with news, and you need to know what's happening right now. This isn't just another update. It's your front row ticket to the most electrifying developments shaping the future. We're talking about projections that could redefine wealth, massive shifts in how capital flows, groundbreaking corporate strategies entering the digital asset space, and even healthcare giants making monumental bets. The pace is relentless, the stakes are higher than ever, and if you're not plugged in, you're missing out. We've got the inside scoop on what's driving these massive moves, from regulatory shifts to surprising market signals. Are you ready to dive deep? Let's go. First up, we're breaking down the incredible market projections for the second half of 2025. Think triple-digit targets and a complete reshaping of the financial landscape. What's fueling this explosive optimism? We've got the details on the policy pivots, liquidity conditions, and regulatory tailwinds that are setting the stage for unprecedented growth. This is the analysis you've been waiting for, packed with insights that could change your perspective on the market's potential. Then, get ready for a deep dive into the latest market signals that are turning heads. We're seeing massive stablecoin inflows into major exchanges, hinting at a significant reentry of capital, all while Bitcoin navigates some serious volatility. What does this influx of stablecoins, coupled with strategic Ethereum withdrawals, tell us about trader sentiment and the next big moves? We're dissecting the on-chain data and what it means for the immediate future. And the corporate world? It's making waves. We're uncovering a stunning new partnership that could see a major media and tech group strategically acquire a significant altcoin mirroring established Bitcoin strategies. This move is already sending shockwaves through the market, and we're here to tell you exactly why it's making headlines and what it means for the broader altcoin ecosystem. Finally, we're looking at a healthcare giant that's making an astonishing $5 billion bet on Bitcoin. This isn't just a small investment. It's a massive Treasury strategy that could fundamentally alter the company's trajectory and how healthcare integrates with digital assets. What's behind this bold move, and what are the implications for shareholders and the market at large? Stick around, because you won't want to miss this. Don't forget to smash that like button, subscribe to the channel, and hit the notification bell so you never miss an update. Let's get into it. Market set for explosive growth. Analysts are forecasting a dramatic surge for Bitcoin in the latter half of 2025, with projections pointing towards a target range of $150,000 to $160,000. This optimistic outlook is underpinned by a confluence of favorable factors, including anticipated shifts in U.S. Federal Reserve policy, a potential reduction in interest rates, and a generally positive trend in global liquidity conditions. Furthermore, the evolving regulatory landscape for cryptocurrencies is creating a more conducive environment for market expansion. The recent initiative by the Trump administration to permit cryptocurrency integration into 401(k) retirement plans is a significant development. This policy change opens a direct channel for substantial capital to flow into the crypto market, tapping into the estimated $9 trillion U.S. retirement market. This integration could dramatically increase the overall market capitalization of digital assets, making them accessible to a much broader segment of the population. Technical indicators are also signaling strong bullish momentum. The DeMark TD sequential monthly chart is approaching a potential turning point, with the index moving towards setup 9 and countdown 13. Historically, when this indicator reaches these levels, it has often signaled a strong overbought condition, suggesting that a significant upward price movement might be imminent before a potential consolidation. Concurrently, the total cryptocurrency market capitalization chart is showing signs of a potential breakout, which, if realized, would further validate the bullish catalysts already in play. These technical signals, combined with the fundamental drivers such as expected monetary policy adjustments and a more welcoming regulatory environment, paint a picture of significant upside potential. The market is viewed as being exceptionally well-positioned for a substantial rally, potentially reaching new all-time highs. A $5 trillion market capitalization for the entire crypto market is within reach under these conditions. However, potential headwinds exist. Key risk events on the horizon include the possibility of higher-than-expected inflation readings in the coming months and any disruptions in trade negotiations between the United States and China. While these factors could introduce short-term volatility, the prevailing sentiment is that these issues are more likely to result in temporary market adjustments rather than a fundamental derailment of the bullish trend. The expectation is that trade talks might be extended to maintain market stability, a common tactic to appease financial markets. In summary, the combination of supportive macroeconomic policies, increasing regulatory clarity, and strong technical indicators creates a compelling case for substantial price appreciation in Bitcoin and the broader cryptocurrency market leading up to the end of the year. The convergence of these factors suggests a period of significant growth and opportunity for investors. But what happens when the market signals start flashing mixed messages? Next, we'll explore the intriguing data showing stablecoin inflows amidst Bitcoin's volatility. Stablecoin surge signals trader reentry amid Bitcoin volatility. Recent activity on major cryptocurrency exchanges, particularly Binance, indicates a significant influx of stablecoins, with net inflows exceeding $1.65 billion. This substantial movement suggests a renewed interest from traders and a potential preparation for reentry into the spot cryptocurrency market. This trend is occurring against the backdrop of Bitcoin's considerable price volatility, which saw it dip below the $109,000 mark before attempting a recovery. This marks the second instance this month where Binance's stablecoin deposits have surpassed the $1.5 billion threshold, a pattern that on-chain analytics firm CryptoQuant interprets as a strong signal of capital poised to re-enter the market. Adding another layer to this complex market picture, exchanges have observed nearly $1 billion in Ethereum, ETH, withdrawals. This suggests a strategic shift by investors who appear to be prioritizing the long-term storage of their assets over active trading. Such a dynamic points towards a bifurcated market sentiment. While stablecoin inflows indicate potential buying interest, the significant ETH withdrawals highlight a preference for holding positions, reflecting a cautious optimism as traders await more favorable entry points following the recent price fluctuations. Binance's dominance in the cryptocurrency trading sphere was further emphasized by its record-breaking daily trading volume. On the day of the stablecoin surge, the exchange processed over $29.5 billion in trades, a figure that is nearly 6 times higher than that of its closest competitor, Bybit. This staggering volume not only solidifies Binance's position as the leading exchange, but also raises concerns about the concentration of liquidity and the potential systemic risks associated with such dominance. Indeed, Binance's spot trading volume for the year has already surpassed the combined totals of its top 5 competitors, underscoring its outsized influence on market dynamics. The recent price action in Bitcoin has been influenced by several key events. A significant sell-off of 24,000 BTC by a large holder, often referred to as a whale, over the weekend triggered substantial liquidations across the market. This event coincided with ongoing net outflows from US-based Bitcoin exchange-traded funds, ETFs, which experienced over $1 billion in net withdrawals in the preceding week. However, a glimmer of positive momentum emerged on Monday, as Bitcoin ETFs recorded their first day of net inflows in 6 trading sessions, breaking a prolonged streak of outflows. Analysts attribute the recent ETF outflows, in part, to polarized investor sentiment regarding U.S. monetary policy. Adding to the market's complexity is Bitcoin's notable divergence from the global M2 money supply, reaching its largest gap in 2 years. While Bitcoin has historically shown a strong correlation with M2, typically with a 2 to 3 month lag, and this correlation has offered some predictive value for short-term price movements, longer-term fundamental analysis suggests that total global liquidity provides a more robust view. Real Vision founder Ray Alpal has underscored the importance of this broader liquidity metric for understanding Bitcoin's long-term fundamentals. Despite recent sell-offs and market uncertainty, institutional and sovereign buyers have remained active, strategically accumulating positions during the price pullbacks. This indicates that while retail interest may have waned temporarily, major market participants continue to view Bitcoin as a strategically attractive asset. The current market environment presents a critical inflection point, and observers are keenly watching whether the recent stablecoin inflows into Binance signify a broader market rebound or merely a brief pause within a larger correction. Corporate strategies are evolving at lightning speed, and one deal is making major waves. Next, we're diving into a massive partnership that's putting an altcoin in the corporate treasury spotlight. Trump media bets big on CRO, sparking altcoin overtake debate. In a move that echoes the corporate digital asset accumulation strategies seen with Bitcoin, Trump Media and Technology Group has announced a significant $6.42 billion agreement to establish a digital asset treasury company. This new entity, named Trump Media Group CRO Strategy, will focus on acquiring CRO, the native token of the Cronos blockchain. The venture will be listed on the Nasdaq under the ticker MCGA, following its merger with Yorkville Acquisition Corp., a special-purpose acquisition company, SPAC. The financial structure of this deal is substantial, comprising $1 billion in CRO tokens, $200 million in cash, $220 million in warrants, and a $5 billion equity line of credit from a Yorkville affiliate, positioning Trump Media Group CRO Strategy to become the largest publicly traded CRO treasury company. This strategic alignment draws a clear parallel to the approach pioneered by Michael Saylor's strategy, formerly MicroStrategy, which began accumulating Bitcoin in 2020. Trump Media Group CRO Strategy intends to replicate this model by allocating significant cash reserves to acquire CRO tokens. Furthermore, the company plans to operate a validator node on the Cronos blockchain. This role will involve participating in the network's security and governance, thereby earning staking rewards. The objective is to enhance capital efficiency and cultivate long-term value by leveraging the robust ecosystem of Cronos. The Cronos blockchain is recognized for its high performance and interoperability, facilitating low-cost, high-speed smart contract execution and seamless integration with other prominent blockchain networks. This makes it a strong candidate for underpinning future digital economy initiatives. The Cronos ecosystem already supports a range of decentralized finance, DeFi protocols, and multi-asset marketplaces, with the CRO token serving dual roles as a utility and governance asset. Notably, a recent reissuance of the token increased its supply by 233%, from 30 billion to 100 billion tokens. This expansion has generated a mixed reaction from token holders, with some expressing concerns about potential dilution. The market's reaction to this announcement has been palpable. The price of CRO surged by over 30% in the days immediately following the news, outperforming the broader cryptocurrency market, which experienced a slight downturn during the same period. The CRO token reached a new yearly high of 22 cents, indicating a strong vote of confidence from investors regarding this new partnership. Concurrently, Trump Media's stock price saw a 6.6% increase, reflecting positive sentiment among equity investors about the company's expanding digital footprint. This development aligns with a broader trend of increasing corporate investment in digital assets. Several companies are adopting similar treasury strategies, exploring Bitcoin and Ethereum-based holdings, and even specific meme coins. However, the Trump Media Cryptocom deal stands out due to its scale and its focus on a less prominent altcoin compared to Bitcoin or Ethereum. This strategic choice raises questions about its potential impact on market dynamics and the possibility of CRO achieving greater institutional adoption. The future success of Trump Media Group's CRO strategy will hinge on several critical factors: the effective execution of its validator node strategy, prudent management of its CRO holdings, and the overall performance and adoption of the Cronos blockchain. Analysts will be closely observing how the company navigates the regulatory landscape and achieves its stated objectives of enhancing capital efficiency and building long-term value. This partnership represents a significant step in the integration of cryptocurrencies into traditional corporate finance strategies. Corporate strategies are evolving at lightning speed, and one deal is making major waves. Next, we're diving into a massive partnership that's putting an altcoin in the corporate treasury spotlight. Healthcare giant makes $5 billion Bitcoin treasury bet. Kindly MD, a healthcare firm listed on the Nasdaq, has launched an ambitious $5 billion at the market equity offering program designed to finance its burgeoning Bitcoin treasury strategy. This initiative follows the company's recent merger with Nakamoto Holdings, an entity specializing in institutional Bitcoin investments. The equity offering, registered under the SEC's Form S-3 shelf registration, provides Kindly MD with significant flexibility to issue common stock based on prevailing market conditions. The capital raised through this program is earmarked for several key corporate objectives, including the acquisition of Bitcoin, essential capital expenditures, and potential future acquisitions. This strategic move is built upon Kindly MD's prior actions to accumulate Bitcoin. The company recently acquired 5,744 BTC for approximately $679 million, achieving a weighted average purchase price of $118,204 per Bitcoin. CEO David Bailey characterized the $5 billion program as the natural next phase of the company's growth trajectory. Previously, Kindly MD had secured $500 million via private placements and issued a $200 million convertible debenture backed by Bitcoin assets. If the entire equity offering is successfully executed, Kindly MD could ascend to the ranks of the largest institutional Bitcoin holders globally. The announcement of the equity offering led to an immediate market reaction, with Kindly MD's shares experiencing a notable decline. Shares dropped 12% during regular trading hours and an additional 2.7% in after-hours trading. This downturn is largely attributed to investor apprehension regarding potential share dilution, a recognized risk associated with equity offerings used to fund significant Bitcoin acquisitions. Industry critics and analysts have frequently cautioned that such strategies can negatively impact shareholder value, particularly if the company's stock price underperforms relative to Bitcoin's performance. Bitcoin is currently trading near the $111,200 mark, reflecting a decrease of over 6% in the past month, influenced by broader market volatility. Kindly MD's decision to establish a Bitcoin treasury strategy aligns with a growing trend among publicly traded companies that are exploring Bitcoin as a potential hedge against inflation and currency devaluation. Current data from Bitcoin treasuries indicates that 174 publicly listed firms collectively hold approximately 988,913 BTC. Among these, MicroStrategy, now rebranded as Strategy, maintains the largest corporate Bitcoin portfolio, holding 632,457 BTC. Kindly MD's management has emphasized a strong commitment to transparency and corporate governance, signaling plans to enhance its disclosures in the coming months. The company also highlighted the strategic rationale behind its Bitcoin focus, pointing to the cryptocurrency's increasing recognition as a global reserve asset. To facilitate the equity offering, Kindly MD has engaged multiple underwriters, including TD Securities and Cantor, with shares slated for trading on the Nasdaq. Industry observers are keenly evaluating whether Kindly MD's strategy will emulate the success of MicroStrategy, which has effectively utilized equity and debt financing to build a substantial Bitcoin position, leading to significant appreciation in its stock price. However, inherent risks persist, especially in a declining Bitcoin market where the issuance of additional shares can dilute equity value. Analysts stress that the long-term sustainability of corporate Bitcoin treasury strategies is contingent upon Bitcoin's price performance and overall market sentiment towards crypto-centric firms. Kindly MD's stock has demonstrated remarkable growth, surging 330% since early May when it first unveiled its Bitcoin treasury strategy, and an impressive 550% year-to-date. This performance reflects the market's broader enthusiasm for crypto-linked equities, even amidst Bitcoin's price fluctuations. The company's aggressive capital-raising effort underscores the ongoing convergence of traditional finance and cryptocurrency, suggesting that more firms are likely to adopt similar strategies as Bitcoin's integration into corporate treasuries continues to expand. These are massive shifts, but what's the ultimate takeaway for you? We'll wrap it all up with a quick recap and your next steps. All right, what a ride! We saw Bitcoin projections hitting $160,000 fueled by policy and liquidity. Then, massive stablecoin inflows signaled a potential market reentry, even as Bitcoin saw volatility. We also covered Trump Media's huge $6.42 billion deal making CRO a corporate treasury asset, and a healthcare giant betting $5 billion on Bitcoin. Incredible times. If you found this information valuable, do us a favor. Smash that like button, subscribe to Bitcoin Bulletin for all your essential market updates, and ring that notification bell so you're always in the know. Don't forget to follow us on our social channels for even more insights. Let us know in the comments what you think about these massive market moves. Thanks for watching.